All right, well, a slew of acquisitions taking over the life science space lately. Here are a few examples. Celgene acquired Receptos for $7.2 billion. Alexion bought Synergiva for $8.4 billion. And Teva Pharmaceuticals acquired Auspex for $3.5 billion. All of these deals happening within the last 3 months. And here with more details on opportunities within the life science space is Scott Smith, Director of Life Sciences Investment Banking at Wedbush. And Scott, what does all this M&A activity say about the life sciences space and its prospects for the future?
Yeah, well, we believe in it. You'll find across the board, I think investors are believing it's a very great sector to invest in. We have great science in this cycle. Valuations in some cases may be viewed as more robust previously, but with an accommodating FDA, better science, we think it's a good bet for investors.
And do you think M&A activity in the space will pick up? Because it's been quite a year so far.
Yeah, so it's been very robust, and I would say my personal expectation, ours as a group, is that it would continue. Again, the science is good. If you look at Big Pharma continues to have trouble innovating, and much of the innovation has just been offloaded to life science companies and startup companies. So you have a robust IPO market. Companies such as Receptos, you mentioned Receptos, they've been able to raise a lot of capital and keep ownership of all their products in-house.
Now, you're holding your annual healthcare investing conference here in New York. Tell us a few of the stocks that investors are excited about right now.
Yeah, so Bluebird, so ticker Blue, is an IPO from a couple years ago. This company has had a really good run. They've completed a few offerings to keep ownership of their products in-house, but have also had very good trial results. So I'd say cutting-edge science. Earlier stage, but looks very promising. Also, Pacira, in what I would think of as more of the specialty pharmacy space, has really executed on the launch of their key product, Exparel. And again, fairly robust market cap, fairly liquid name, two companies that we've seen a lot of investor interest in.
And are investors in this conference talking about valuations? What are they saying? Are they too frothy in the healthcare space?
It's interesting. There are pockets of overvaluation, but I think there's also pockets of undervaluation. So if you look at medical technology as a sector, there's been some interest in medical technology because valuations are considered low. I think in biotech, you'll find, again, pockets here and there, but for the most part, the science is better. FDA seems to be agreeing and approving drugs faster and with less risk. So, valuations hasn't really been, they haven't really been a topic as much as tell me about your science, tell me about your execution.
And for investors who want in on this space, what's your advice? Where should they be looking? Are there ETFs out there that could be a good vehicle to capture some of the value in the space?
Yeah, so that's a good question. So, in general, I would say ETF is probably, not being an investment manager, broker, but I would say ETF may not be a bad way to look, bad way to play. In general, the sector is good. Individual stock picking, we've really had a strong development of institutional specialists. So, I guess my advice would be you might want to leave that to the specialists, but if you follow specialists, follow funds flow and see who's investing where. That's not a bad way to follow.
All right, Scott, we'll leave it there. Scott Smith from Wedbush, thanks very much for coming in.
Thanks for having me, Scott.
I'm Scott Gamm, and you're watching The Street.